Hi, this is Carl Weiss with Follow the Bots. Today is Thursday, July 25th, and you're looking at a 5-tick range bar chart in the forward E-mini S&P 500 futures contract. And I'm on a call with Billy Duryea. And we have a couple of things we want to get through in this video, what we're calling a talking shop or shop talk video. We want to talk about this horizontal line, this 72 number down here. And we want to walk you through how we've been denoting and calling out that 72 number for the last couple of days. We want you to know where to find this information on the website. And then we want to wrap it up and talk about how then, once you know the 72 number, how to use order flow to really trade with that. So welcome, Billy. And I'm going to pivot over to our website and show folks a couple of tabs. We have what we call market structure. And in here, you'll notice this Friday's market structure. This was last Friday. And then Monday's market structure. Tuesday's market development, Wednesday's market development, and then today's Thursday, the trading day, when we actually hit support. So Billy, I just want to turn it over to you. I've highlighted here where you started mentioning support, and just turn the floor over to you and give us some of your thoughts about the market structure and that number.
Okay. Thank you, Carl. Hi, everybody. Bill Duryea here. So in our market structure document, we tried to give an executive summary of the market developments that have occurred in the recent time frame. And we highlight, as we did here on Sunday, where the key support and resistance levels are. And so in the context of the rally up to the high, we were drawing the inference that we could not ignore the support level down at 1675, 1673. So I'd like to click over to this chart that we were looking at and show you where that support reference comes from. Did we lose that line?
No, it's a couple days back, so you have to go back, I think, to like Friday's close.
There we go. Okay. So here we are. This is the 18th, and this is the last major low that the S&P traded up from on its trajectory path to the new multi-year high. So this was where we drew the first reference. And you can see here that during the initial pullback, the exponential move off of this low traded from 72 up to 87, and following the rally up to 87, there was the subsequent pullback here to 76. And this is where those two reference points come from. So with that said, let's go back now to our order flow monitor. And what we endeavor to do here for our members is to maintain an ongoing narrative about the developments so that when you come into the trading day, you are clear on what the reference points are, where they came from, and why they are significant, where the significance of those references are derived. So here's our mention on Monday about the support level down here at or near the 72s. And as you see here, the market at this point in time, 22 points below that current high, that equals the distance of a daily range. We reiterated this again in our commentary on Tuesday.
So Billy, can I jump for a second? Just so folks know, so when we say Tuesday's commentary, that's a wrap-up of Tuesday for Wednesday's trading.
For Wednesday's trading, yes. Right. Preparation for coming into the next day's session. So that's what the market structure is about. We talk about the developments of that day and the references derived from that day's events coming into the next day's session. And you can see again here on Wednesday, we continue to highlight the importance of this support level and this was our ideal candidate for a pullback. This was where we, using our Gaussian model, inferred the greatest likelihood of the market stopping, stalling, pausing, and retracing back to the high.
So, Billy, if I could jump in just one more time then. One of the reasons that
Sure.
Billy and I were talking before the broadcast that we wanted to really highlight this was that there's a lot of information in a lot of nooks and crannies on Follow the Bots. We try to make it very, very data rich. We try to give a lot of information, and we try to put it consistently. We try to put it in a lot of places. And I think one of our jobs is to let the consumer of this information know where to get it and when to look at it. On our site, we do have a link up here that says how to use the site. And the first instruction on how to use the site is to start your day with market structure. And that's why we have it an icon of a guy getting out of bed. Just so you know, start your day with market structure, and then that'll train you to know where the levels are. So back to you, Billy.
Very good. And then after the overnight session, in the market commentary, I'll give an executive summary there as well as what happened in the Asian and European markets, because that's what drives the overnight Globex session. And then before the open, we update the action that occurred overnight and whatever new developments that may have affected the parameters of the trading range. We discuss those clearly in case any changes had occurred, so that when the daily open begins, you're prepared as to where the most likely levels to look for the appropriate response on pullbacks and retracements. Shall we go back to the chart again, Carl?
Sure.
So now that we have highlighted the developments there, and you can see where we drew the reference from for the 72, 76s. You can see here, first of all, yesterday when the market pulled back from the high, the first stopping point was down here at the 67s. So just a point above the, the 77s, just a point above the 76s, the first initial reference. That resulted in a minor uptick off of that back to the 84s. Following that, in the overnight session, the market made its final descent down to the 72s, and when it traded down to 72, the initial buy response that we inferred occurred, and the market auctioned back up again to the 82s, so that provided a 10-point opportunity. And after rallying up 10 points off of the low, later in the session, the market pulled back again to the 76-75 level and retested support, and then went on from there to trade up another 10 points to the resistance target up at 85, 86. And what I would like to ask you, Carl, if you would speak on, because Carl is really he's the engineer, the algo engineer here in terms of discerning the order flow events in the micro context. And so when you know the major or macro support levels, then you want to be able to say, well, how do I know if support is going to hold? Like, what's going to tell me if, okay, great, it pulled back to support, but I mean, what does that mean, and how do I interpret it in real time? And that's where the union between the longer-term macro and the micro occur. So, Carl, if you would kindly come back on the mic here and explain to our members how to read the order flow events that occurred at these key support levels.
Yeah, sure, Billy. So I'm going to take the mouse over for a moment.
Okay.
And we have here the horizontal line at 72. And then if people know some of the classic technical analysis, this is a double bottom. So it ticked here to, I think it's 71.75, and then again to the same tick, 61.75. Right here, at the low tick, we have what we call BR. That stands for bids replenished. And bids replenished is a really cool algorithm. It's a very order flow centric algorithm. Oh, well, all of our stuff is very order flow centric. And what bids replenished means is that this algorithm has detected a sequence and a footprint of bids coming back into the book, orders being filled at the bid, bids coming back into the book, orders being filled at the bid, and then price behavior responding to those fills with a certain footprint that matches prior market turns. So that's why we call it bids replenished. And some people can say, oh, well, bids are always being replenished. So yes, it does. Bids in the book are always being replenished. We're not saying that they're being replenished. We are saying that they're being replenished in a frequency and in a rate and have an effect on price behavior that is similar to prior market turns. So that's a pretty good thing to see.
Define that, Carl, statistically? So you mean the algorithm has looked back to what, the last 1,000 examples of a solid turn, and then it has constructed the footprint based on that statistical occurrence?
Pretty much. Pretty much. That's exactly, I wouldn't say 1,000. There's a lot more data points in there than that. And but it knows when these bids are being replenished and price behavior is responding in a certain way that indicates that those bids being replenished are meant to replenish the book. Like, that's right. Being replenished for a reason. Like, those things.
So just for the sake of someone who has maybe heard the term bids replenished but hasn't really thought it through, an example might be if the market traded down and there were 100 contracts there and they filled, and then immediately another 100 filled, and then someone sold those, and then they filled them again, and then they filled them again. They kept replenishing the bids in a manner that did not allow price to drop any lower. Is that kind of, in a layman's term, Carl, how the bid replenish concept works?
That's exactly it.
That's exactly it.
That's exactly it. Like, somebody's in there buying and they mean it, and they're not going to let it tick below.
And they mean it, and they're willing to say, you know, you want to sell 1,000, I'll take all of them. You want to have another 1,000 to sell, I'll take all of them, right?
That's exactly correct. So that's the kind of buyers that we see down there, and we say, oh, they mean it. So if we see that kind of buying, we think that that's really actionable information. That's the kind of information we want to surface for people, because then it can give them a sense of confidence that if they're buying, you know, the big guys are behind them down there.
Right. Now, Carl, Lamarck, that happened overnight, and a lot of our members may not you know, be up at that time and may have missed that move. And if you look over where it went horizontal there around the 76s after it first came up off the low at the open, before it went right up to the high. Mm-hmm. So a person might have been thinking, geez, you know, I didn't get up and I wasn't sure what to do with the open. But then you had that second chance where it came back down again and retested the low. And personally, for me, Carl, the order flow events that Skeeto surfaces there are ones that really are meaningful to me with the sell programs waning. Could you just go over those and explain to everybody like what they mean and how that was supporting the notion to buy the pullback?
Yeah, absolutely. Let me make this a little bit bigger. So I'm going to try to zoom in on your chart, but I can't seem to. Oops. So, as you mentioned, Billy, a lot of people are not up in the middle of the night trading, though we did get a couple of notes from subscribers to Follow the Bots that they were up trading that. But if you missed that, there's always another opportunity to get in. That's the one thing about the market, you know, it's like waiting for a bus. If you miss it, there'll be another opportunity. So if you're looking to buy the pullback, I think, Billy, some of your logic is that we saw this cluster here in the pre-market, and you had some other reasons to believe that this is going to be an area to start looking to buy if price pulls back to here. So price did pull.
It also was the prior day's low right?
Correct.
And then at the open, see that little cluster formed just before the open. At the open, they made no effort at all to go down to the overnight low. They were anxious to get in there, right? The prior day's low.
Mm-hmm.
And so that's also part of, things you need to be aware of.
So in terms of this term, so in terms of the pullback, if we start looking at order flow, there's a couple of things that my eye catches immediately. You'll see that you have a higher low in MACD at the low. You got a bunch of sell programs waning. And let's just look at the sequence. You have a bar here where you have a high frequency trading sell surge and the sell programs waned. And then you had another strong tape imbalance and the sell program waning as it ticked down to the low tick. So what sell programs waning means is that the price movement, the downward price movement, is not being supported by enough order flow, enough selling order flow to warrant this kind of price move. And what sell programs waning means, and the reason we put it in as white, is that could be a tipping point. When you get to a point of sell programs waning, basically one of two things have to happen. If the sell programs wane, then price is going to stop its descent and turn around. Or more selling has to come in to help push the market down. But at this point, the sell programs have come to a point where some buying coming in would lift it. And one thing you see here is you see a cross in the follow the bots digital filters really early on. You see a cross in the digital filters really on, and you see this really steep curve. Another nice thing is that you'll see the digital filters came down here, and you see a nice turn right here at the low. You actually see a cross of the fast digital filter to turn above the other digital filter prior to the low put in, and you'll see the slope of the digital filter is moving pretty high up pretty quickly right here at the turn and close of this bar.
Exponential almost.
Exponential. Next thing you see a little further up is a high frequency trading buy surge. So if you're saying I want to either catch the low, the retracement, or you want to jump in after the fact, you've got hints that you're pretty safe either way. So you see the sell programs waiting here if you wanted to enter on a limit order. You'll notice you'll see a high here and a higher high in MACD here, accompanied by a high frequency trading buy surge. So I would be comfortable even entering on a market order here, this late in the game at 1680, knowing that it was going to go at least to here, 1682 and a quarter.
At least back to the prior high.
At least, and with this rate of acceleration, you'll see in price there's no downtick, probably make another higher high. And that's one of the distinctions that people who know how Billy trades versus how I trades is Billy's looking often to get in at a much better price than I am. He's going to get in a limit order at a much better price, and he's going to have a longer swing trade where I'm going to get in much later with a market order and have a shorter trade. And I think we both do that because that fits our trading personalities, or each of our trading personalities.
Yes. I think the nice thing about looking at this from multiple, from two sets of eyes, is that it provides people more than one way of doing their analysis, and everybody has to find their niche. Not everybody is comfortable doing the same thing, and so to have a set of algorithms that if you weren't comfortable buying and weren't sure, and then you saw it take off, and then you realize, yes, it is going to hold, you could still get in late and still pull a decent profit out of the market order fill that you spoke of.
Exactly. Exactly. So, Billy, I just want to thank you for taking this time out at the end of the trading day, because I know it's a long day for all of us. And what Billy and I plan on doing is have more of these kind of shop talks to walk you through the site, and so you know how to use it, and also walk you through the trades so you can trade by following the bots.
Great. Well, a pleasure, Carl. Thank you, everybody, for your time. We appreciate your membership, and it's our pleasure to be able to share with you these subtleties and these nuances of market development.
To learn more, take a tour of www.followthebots.com.